10:17 a.m. We have some breaking news. I'm XRP Future Millionaire. We're waiting for the Fed, but this is what's coming out right now. U.S. inflation hits 39-year high of 7% set stage for Fed hike. So if the CPI comes out at 7%, this is going to be detrimental. And this is what we're expecting, somewhere in this area. And it will set a 39-year high, and it's going to be catastrophic. So real quick, before we do the intro, let's start out with UB2B. Face fear, uncertainty, and doubt head on. FUD assassins, UB2B. My meme genius. Check out his Twitter. He's getting followers every day. And he's got some cloud art out this morning that I would really like to share as well. So I like to look at this. It's truly tremendous. UB2B, keep it up. Great work, inspirational, and it also gives me a positive vibe in the morning. And that is greater than any other gift. So go to my video description, you can find UB2B. So before we go into that, let's play the intro. Okay, welcome back, everybody. Just make sure to hit that like button. I would really appreciate it. It does help me push through the analytics. Let's take a quick look at the market and see what's going on. And then we'll go read that. So XRP's at 79,982. It's at a critical level here. So is Bitcoin. Can we get topside at 80 cents and use it as support? And try to come up to the 4-hour time frame at 83 cents roughly. Or is this going to be our resistance level at the 100-day and we're going to get rejected? This is where it all comes down to right here. This is the area. We've got 80 cent resistance roughly. We're trying to see if we can use the 79.4 support or resistance as a support. It looks like we could be coming up to a high. We're hitting these lines perfectly. And with what's coming out later, I would not get too comfortable, ladies and gentlemen. So just watch the 75 support. And then the 79.4 area, see if it can hold this support. See if we can squeeze out of here and get up to 83.8. What you're looking for here is the daily close over 80 cents to confirm a move to about 99 cents on that Japanese candlestick pattern that I broke for you guys. And it's riding that absolutely beautifully. So between that and Bitcoin, we've got Bitcoin trying to push up to this 44,864 that we marked out. We're kind of in no man's land right now. The volume came in pretty strong for one 30-minute candle, but now these last few have been dying. So this could be the end of the rally unless we can get another surge. But with what's coming and what's breaking as the morning goes on, this does not surprise me that we pumped up first, because we could have a catastrophic loss here as the day and then this week moves on. So that's all for the technicals. Now I want to read this. U.S. inflation hits 39-year high of 7%. Set stage for Fed hike. This came out 51 minutes ago. So U.S. consumer prices soared last year by the most in nearly 4 decades. Illustrating red-hot inflation that sets the stage for the start of Federal Reserve interest rate hikes as soon as March. The Consumer Price Index climbed 7% in 2021, the largest 12-month gain since June 1982. According to Labor Department, a data released Wednesday, the widely followed inflation gauge rose 0.5% from November, exceeding forecasts. So this is worse than they expected, what's going to be reported to all of us. Excluding the volatile food and energy component, so-called core price accelerated from a month earlier, rising by a larger than forecast 0.6%. The measure jumped 5.5% from a year earlier, the biggest advance since 1991. The increase in the CPI was led by higher prices for shelter and used vehicles. Food costs also contributed. Energy prices, which were a key driver of inflation through most of 2021, fell last month. The data bolster expectations that the Fed will begin raising interest rates in March, a sharp policy adjustment from the timeline projected just a few months ago. High inflation has proven more stubborn and widespread than the central bank predicted amid unprecedented demand for goods, along with capacity constraints related to the supply of both labor and materials. Meanwhile, the unemployment rate has now fallen below 4% against this evolving backdrop. Some Fed policymakers have said that could be appropriate to begin shrinking the central bank's balance sheet soon after raising rates. Market expectations for Fed tightening expected in March and 2022 as a whole were largely unchanged after the report. Yields on 10-year treasuries remain lower with the dollar, while the S&P opened higher. In terms of where the Fed is on their dual mandate, inflation and the labor market, they're basically there. Michael Gampin, chief U.S. economist at Barclays PLC, said on Bloomberg Television, I don't really think anything stops them going in March except one of these kind of outlier events. I think they're ready. The energy index declined 0.4% from November, the first month of the kind since April, on gasoline prices slid. Food inflation climbed 0.5%, a slight deceleration from the previous month due to falling costs for meats. What we have now is mismatch between demand and supply. We have very strong demand in areas where supply is constrained, particularly around goods, particularly around things like cars. Fed Chair Jerome Powell told the Senate Banking Committee on Tuesday. Desperate to fill open positions, businesses are increasing pay to attract and retain workers, particularly at the lower end, but rising prices are eroding those wages advances. Inflation-adjusted average hourly earning dropped 2.4% in December from a year earlier, the biggest drop since May. Separate data showed Wednesday, however, compared with a month earlier, they rose 0.1%, the first gain in 3 months. What Bloomberg economists say? The December CPI showed strong demand and supply bottlenecks still at play, with goods inflation driven higher by auto and apparel prices. A step down in services prices may prove misleading, with shelter costs set to be a growing source of upward pressure in 2022. For the full shelter costs, which are considered to be a more structural component of the CPI and make up about a third of the overall index, rose 0.4% from the prior month. Other gauges of home prices and rents have surged last year, likely presaging a sharp acceleration in the report's housing metrics this year and offering an enduring tailwind to inflation. Blah, 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 blah variant in the U.S. is poised to further disrupt already fragile supply chains as quarantines and illness prevent some employees from going to work. Spending on services like travel may slow, pushing down prices, but goods prices may move higher. Nonetheless, the impact is expected to be temporary. Economists expect CPI growth to moderate to around 3% over the course of 2022, which will depend on supply chain normalizing and energy prices leveling off. However, higher rents, robust wage growth, subsequent waves of blah, 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 and lingering supply constraints all pose upside risk to the inflation outlook. The persistency high inflation is also likely to maintain a high hurdle for President Joe Biden and Democrats to revive their roughly $2 trillion tax and spending package. After a key lawmaker, West Virginia Senator Joe Manchin, objected to the legislation in part because of the surge in prices. On December basis, the increase in the CPI was the largest advance since 1981. Wow. That's the highest in 41 years, or in 40 years. The inflation environment changed markedly in 2021 compared with the prior year, when a pandemic-related slowdown in demand led to the smallest calendar year gain in the CPI since 2015. So that's a lot to consider, guys, a lot of information. I'm going to release this so you guys can see what's coming up ahead of us.